Hello everybody, it's Jason with Investing Logically. In this video I've just given just a short update on Tesla and their earnings report that came out this week that they just released, and why Tesla should still be a buy even though their earnings were missed. And also feel free to sub to me if you want to see more videos like this. Yahoo Finance, their Q4 2020 earnings, they're expected to do 1.03, but they did 0.8. So that's not a big miss. I don't think they did do well in the past 3 quarters, but this quarter, don't know what happened. But other than that, so as a result of this, Tesla's stock price as of 28th of January had decreased by 3.32%, which is $28.73. To the earnings report, we're just going to look at this quick article. So first reason why Tesla could be sold by right now at its discounted price. Report shows Tesla misses on earnings but expects 50% average annual growth in deliveries going forward. This is really good for Tesla, the company. Just brief highlight. So they have their cash has increased by 4.9 billion in this quarter, which is always good. Their Model Y production in the Shanghai factory had started in December 2020. What they did improve was they updated their Model S and their Model X, which was launched this month. So we're just going to look at the financial statement. So what I'm going to do is move my camera here. So in Q3 2020, their revenues were 8.7 million, and then in Q4 of 2020, which is now, increased to 10.7 million, which is a good sign. We can see here that they have updated their autopilot and full self-driving, so FSD, and that's quite good for the customers of Tesla. Also, they have a new Tesla Model S that can do 0 to 60 in 2 seconds right here. So that's might be appealing to some Tesla customers. Just look at their energy storage deployments. So from 2015, it increased massively throughout 2020. So I do think that this is going to grow massively in the coming years. We're just going to look. This is the new Tesla Model S. There's like half a steering wheel, and looks like the interior has improved. I think they improved the screen and the dashboard. Oh, there's also a screen, and there's also a screen at the back seat. That's pretty cool. So we can look. So this is the key thing. Look at the deliveries, guys. Guys, look at this. From 2018 throughout 2020 Q4, their deliveries went from around 25,000 to roughly 180,000. That is more. That is a lot of vehicle deliveries. The company is so healthy. Look at their free cash flow. Look at all their free cash flow went up. Their net income went up. The reason I still think it's a buy is because, you know, Tesla is just not just an electrical company. It's like a solar company. For example, let's say Tesla goes down in price to around 500 per share. I would not be worried because this is going to go ahead in the future years with Joe Biden being president, promoting solar energy and clean energy. Tesla will actually do well. I would actually expect the Tesla stock to increase rapidly because we saw that they expected annual deliveries to increase by 50%. So look at this. Look, from 2018, the net income decreased. That could happen here actually. We never know. But even if it happens, I wouldn't be worried. I'll just buy Tesla stock for the long term. If it drops, buy it at a discount. And yeah, we're in for 10 plus years for this company, 5 to 10 plus years. So I'm not worried about this. So we can see from this balance sheet. Balance sheet shows the assets and liabilities. So assets they have from. So the assets have increased around 7 million from 45 million to 52 million from September 30 to 31 December. Their total liabilities, you can see the total liabilities is around 28,000. So they have more than enough assets to cover their liabilities, which is a good thing. We can see that they have cash and cash equivalents. They have cash of 19 million. That is a huge number for cash. And we can see their total debt, which is 6.2 million. They have more than enough cash to pay their debt off. So that's a good thing. They're not at risk of bankruptcy, which is good for the company. This is not financial advice. Do your own research. So I'm just going to go to right now. Their ARC disruptive innovation. So right now, Tesla is the number one holding. They have around 2,640,907 shares. I truly believe ARK Invest because they have done extremely well in the past 5 years. We've seen that in the charts. So look at their performance. We've seen what Tesla can do. The only thing that could go wrong is they have massive competitors. I cannot see one company in the United States that can be a massive competitor to Tesla. Well, could Porsche, could be Audi, could be BMW, but I do not think they are, because they are not, core vehicles are not up to Tesla standards. They don't have autopilot, they don't have the cool features Tesla has. People are more intrigued. When people think of electrical vehicles, they think of Tesla. They don't think about other companies. They'll buy more Teslas, which will increase the company's revenue and drive the stock price up. So before we end the video, I'm just going to show you this. Another 51,000 shares. That's a good sign. They are stocking up on Tesla. When there's a dip, they buy it. So that's a good thing. Tesla is a great electrical company. They've done extremely well in the past. I wouldn't be worried they dropped stock price this whole month. Just stock up. That's my opinion, not financial advice, by the way. So yeah, they're going to do extremely well in the futures, years to come. And just buy the dips, average down, don't sell. That's from me. Even though they missed their earnings, their revenue still grew. So I still think they have a massive year ahead of them. Guys, enjoy the video and hope you guys have a wonderful day. Keep investing, do your research, and see you guys in the next one. Happy investing. That's me.